banks look like Blockbuster video to me, and we're about the stage where they're saying you don't need to rewind your CDs anymore or tapes anymore to bring them in by offering these bespoke Bitcoin solutions, whatever funds. Oh yeah, we're playing the Bitcoin game now. Well, it's too late. Like you can't move money around. I can't send a wire. You freeze my account if my kids use my credit card. Like enough of this. The whole system doesn't make sense. And what we will see again, always, is that ultimately is one centralized system. So if one goes down, they're all connected, and it's going to require a huge public bailout. And I don't know where that money is coming from, other than a money printer. To me, this is the entire point of Bitcoin. It is the entire point. It's not like, it's a sideshow. This is the reason. Like, it's not an accident that 3 lines into the white paper, Satoshi is saying the main benefits are lost if a trusted third party is required. That's the point. I don't know how to say it more clearly.
Welcome back to the Bitcoin economy. We are here with Kevin Bell, the CEO of Cadena Bitcoin. Kevin, you're down in, I believe, Costa Rica right now. You go back and forth, I know, between El Salvador. But first and foremost, welcome to the show. And then I got to hear about the trip down to El Salvador. I think you were just at a conference over there.
Yeah, well, thanks for having me. Thank you for the platform. I'm trying to think when that was. A couple of weeks ago now, we were in El Salvador for Bitcoin Historical and also adopting Bitcoin. And yeah, I mean, the El Salvador story is pretty incredible in terms of what's going on, the investment it's attracting. It's really amazing what happens when you open the doors for people to be able to build things, that people actually want to come and build things and support the Bitcoin economy. So we're glad to be a part of it and really grateful for El Salvador for providing that, beacon of freedom.
You get a bonus point for mentioning the Bitcoin economy too. And we give bonus points away if you bring it up in conversation.
So is there a bell that goes?
Yeah, we need to get sound effects. We were talking about that. But I guess, for those that don't know you, I always like to set the stage, where you came from, what your background was. I know you came from traditional finance, but what drove you? What was that inspiration, and what was your background that kind of led you here?
Yeah, great question. So most of my life was in foreign exchange sales and trading. So I worked for a few banks in Canada and Credit Suisse at the end. And then, so a lot of experience selling foreign exchange derivatives, structuring products for clients. And then when I left that world in 2015, I was more interested in personal financial planning side of things. One of the things I ended up doing was opening a mortgage brokerage. And in Canada, and kind of experienced the COVID money printing and seeing the insane effect that had on house prices. So that kind of set off an alarm bell. And so, I'm relatively new to Bitcoin. And for me, the ETF adoption was a very big step. I think the criticism I had was always that this will never catch on. And then the price was clearly telling me something different. And, price is the information in a capitalist system. And as much as TradFi wants to ignore that, I think over time, people clearly see the benefits of adding Bitcoin to a portfolio. So that was kind of my professional journey. And then Canada got a bit strange during COVID. So I left, when we were allowed to leave, and came to Costa Rica. Built a house here. And so I ran into a situation where I had 2 assets, a house in Costa Rica as a non-resident and Bitcoin. And borrowing against a house as a non-resident here is very expensive and not something I really wanted to do. So then I was exploring the options of borrowing against Bitcoin. And I was really surprised that with programmable money, that this involved sending your money to a custodian. It didn't really make sense to me. It was my early days of trying to understand Bitcoin, and I certainly thought the programmability and the ability to have smart contracts built directly on Bitcoin that were secure, that didn't require a third party, was really the entire point of Bitcoin. And I still think that's the case. From an investment point of view, if I had, a significant portion of my net worth in Bitcoin, I really wanted to understand the programmability aspect. And it seemed to me when I started to investigate and saw that there were time locks in Satoshi's original code, that there had to be the possibility of, some type of loan or deposit product to be built on Bitcoin. And so started down a path with some developers, a few different teams of developers late last year, and then finally found a team that could build this. A lot of people, in this space will naturally gravitate to building things on second layers. And we really didn't want to do that. And, by April, we had a working product that we knew we could do this. And so now it's really improving the functionality and the look and feel and the user experience of that. In addition, going through the process now of connecting a number of liquidity providers. We have a number of interested mining companies who are interested in offering financing to their clients. There's a number of opportunities to grow the Bitcoin economy.
So Kevin, this is a great example of, we have a co-host on our Thursday show, Treasury Talks, Brian Rothenberg. I met him in Las Vegas this year, and he's been a Bitcoiner since February of this year and just learned about it, went all in, got into treasury companies, but also mainly holds spot Bitcoin, which is great. But it's great to have fresh eyes. Like, I think that's the lesson, is like, it's really good to have somebody's new perspective on like, oh, this should not be the case. Cause I think a lot of us that have been in the space for a long time, you get used to things, you celebrate and you compromise on the small wins that like, oh, okay, they're allowing, Anchorage to be a bank and OCC charter. Okay, they're allowing some of these custodians to work and there's no Gary Gensler. So you feel okay and good, but really you need to question all of these systems, like you're doing now. And I think having that perspective like yours, why are we trusting, who are we trusting with the Bitcoin itself, if that's supposed to be self-sovereign money that you control, and if it's not your keys, it's not your coin. I think for us that, see a lot of these lending platforms and or trying to educate others on the lending or borrowing of Bitcoin, explain to us a little bit about how it works. Like, let's kind of get into on the side of, you park your Bitcoin, with a custodian that's working with a lending platform, and then they give you liquidity, either, new Bitcoin, or they're giving you USDC or US dollars back. What is the process?
Yeah, well, just to the first part of what you were saying, I think, I think as new people come to the space, I think there are opportunities, to improve the user experience and the functionality and the use case for Bitcoin. And I think over time, we're continuing to see that. Certainly, in 2013, I would have lost my keys, and, it's become a bit friendlier to use. And I think it will continue to be the case. In terms of financial products, the fact that I was able to do this just shows me how early we are. And we are extremely early in what is going to become the future of money. And to me, this looks an awful lot like tech stocks did in, the early 2000s after the crash. And, there's a long road of adoption that's going to continue. And that road, is these flywheels of adoption, whether it's the freedom go up technology or the number go up technology. Wall Street eventually figures out that this improves portfolios, and you can see they're dipping their toes in slowly. If you look at it from a risk management point of view and maximizing the risk adjusted return for a portfolio, the allocation to Bitcoin is, going to be substantially higher than it is today, with all of traditional finance. So, I see this continuing for a very, very long time. And, the CAGR of, whether it's 40 or 80% a year or whatever it is, sure, that'll, trend lower over time, but, this is still incredibly early. And so, when you have a year where there's no price appreciation, I think it's just coming. So the product, the easiest way is to understand an example. So I'm going to throw a bunch of numbers out, and maybe it'll stick, maybe it won't. But we have built a peer-to-peer marketplace where one counterparty is lending Bitcoin and one counterparty is borrowing Bitcoin. And by lending Bitcoin, that counterparty is giving up the upside of their Bitcoin and accepting a fixed fiat return. The other counterparty is paying them that fixed fiat return in exchange for their exposure to Bitcoin. And so the way it works with a contract itself, and again, the platform is no KYC, so it's username, password, 12 words. You can log in and do a trade in less than a minute. With the example, the lender, so we have different contract sizes, a 0.1 Bitcoin, 1 Bitcoin, and 0.01 Bitcoin. And we have different tenors, which I think makes the product a bit confusing now, and we may just simplify it to a 1-year loan in the short term, but this is what that would look like. So the lender decides that they want a 10% return, and they're going to be inputting the discounted value of a 50% loan to value product on the Bitcoin collateral. And so that works out to them putting in 0.45454545 into this collateral pool. And so today, if we assume a price of $100,000, that's $45,454 worth of Bitcoin. At the end of the contract, for them to get their 10% return, they're going to receive $50,000 worth of Bitcoin. The other side of that loan is the borrower, and the borrower is taking that Bitcoin exposure. So they're paying the interest up front. They're putting in 0.54 or 54 or 54 Bitcoin to bring it up to a 1 Bitcoin collateral pool. And then they have the exposure of 1 Bitcoin for the term of the loan. And so a number of different things can happen over the term of that loan to Bitcoin's price. And whatever happens, the lender is going to get $50,000 back, and the borrower is going to get what remains. The fiat return is available to the lender. The borrower is then a leveraged Bitcoin position. So kind of a mini sailor, we'll say. They've taken leverage. They've put in 0.55 Bitcoin, and now they have exposure to 1 Bitcoin. And then to use that as a fiat loan, so some people would like to have access to fiat. And so that borrower still has 0.4545 Bitcoin, which they can sell. And then they know at the end of the term, if they buy $50,000 worth of Bitcoin back, they're going to have their 1 Bitcoin exposure again. And so everything's on Bitcoin. It's a funding transaction at inception where we're pooling the collateral, the UTXOs from the borrower and the lender. And then based on Bitcoin's price at the end of the contract, there's going to be a split that's determined. And so what the clients are signing at inception is the funding transaction, in addition to 5,000 potential transactions, which could be the settlement transaction at the end. And then depending on Bitcoin's price, only one of those transactions will settle. There's adapter signatures, oracles, and all kinds of tech stuff we can get into however much you want to. But the point is that it's all on Bitcoin, and the way people sign these transactions is with an app. So the transactions are executed online on the website, and then there's an app where the transactions are signed. And so we've open sourced the app, which is available in the Apple Store. The Google Android version is available directly for download from the website. And the keys, the 12 words, are on the client's device. And so what we're getting is the signature information showing that the client can sign the transactions, but we're not getting the 12 words. And so, it allows fully self-sovereign, I would say banking at this point, because it puts you in a position where as a Bitcoiner, you can hold Bitcoin, or you can execute a contract and turn your Bitcoin exposure into a fixed fiat yield. And so that fixed fiat yield is substantially higher than people are going to get in a savings account or, a T-bill or other low risk investment. And I would say what we're building ultimately is a sovereign curve in Bitcoin for the risk-free rate in Bitcoin. And so I'll continue on this because I'm going, but, the lender in our market is exposed to risk. And the risk is that the Bitcoin falls below their value of their collateral. They're expecting to receive $50,000 back. If the year goes by and Bitcoin has fallen to $40,000, there's only $40,000 of collateral. They're going to get it all, and they're going to think to themselves that they have a fiat loss, even though they have the full Bitcoin collateral. And so, yeah, look forward to sharing the word more and more.
Quick follow-up. So Kevin, for our listeners that are a little bit non-technical or, in Bitcoin and just really held Bitcoin, or, those new to the space in general, you have Bitcoin, which has traditionally been, very like open source, simplified blockchain in a sense compared to all the crazy things you see now. And Ethereum came out and was interesting to people because you could do these smart contracts so that you could handle, the decentralized finance and do contracts. So opposed to say Ethereum, where you're building out, there's hundreds of things built on Ethereum. But the underlying itself isn't as stable, emission schedule is kind of continues to grow. Bitcoin is fixed. And what we want to understand and help elucidate is a little bit of how are you building the smart contracts? And it sounds like, in a very simple terms, you are essentially having the user pre-sign when they open up the loan, 5,000 different transactions. So that when they're pre-signing that, whatever the price is at the end of the contract, that is the transaction that's going through. Is there any historically, is there any risk with that? Has there been any pushback? What was the challenges of making or using this model?
Yeah. So it's a really good question. The challenge of this model is that it depends on Bitcoin's price at the end, and it depends on having a reliable and accurate price of Bitcoin to determine the beginning price and the end price. And so we put a lot of time and thinking into, having a very reliable oracle. And over the past couple of weeks, even as, after we've launched, the team's going back and looking at ways to improve the oracle. And so we have contract sizes of 0.01, 0.1, and 1 Bitcoin today. We're taking an average price from a number of exchanges, doing certain things and coming up with a price. We've open sourced the oracle to make it very transparent, and also, get feedback from the open source community if there's ways to improve the oracle or the oracle process. And, we're very much interested in this. And it's very important that the oracle be independent from Cadena. And so if there were independent third-party oracle services available today, and they're coming along and we're having talks with all of them, we would greatly prefer clients have a number of choices for oracles and other things. As of now, and the reason the oracle is important is because the oracle is determining the payout of the contracts. And so if the oracle is manipulated in any way, whether that's a wrench attack, whether that's, just marking a low price, it's going to potentially impact the payouts to the users. And so our feeling now is we're very comfortable with the oracle for 1 Bitcoin contract size. There's not a huge incentive to, move the market one way or the other when we're dealing with 1 Bitcoin. The oracle becomes an issue when we're dealing with bigger contracts. If it's 1,000 Bitcoin, then somebody, the lender has an incentive to push the price lower at the end, and the borrower. So there's, that's one of the issues that we're dealing with. And, what we're looking at now is, a release 3 or 4 months down the road where we can have oracles with additional currencies. So we can have loans in different currencies. But really now we're kind of at the stages where we're sourcing reliable prices for majors in a way that we can use with this product. And so the UTX oracle's, a great example of something that's come up. I don't know if you guys are familiar with that, but there's a lot in the space that's coming. And, I think the oracle, we started with this a year ago. To me, the oracle is another interesting business opportunity, but it's important that it be totally separate from Cadena. And we're moving in that direction as quickly as we can.
Avoiding the custodians is great. How does one actually get the physical cash though? right? So it's like you are able to take the cash out or lend against your Bitcoin. Where do you go? Do you have to go to a bank and then do you have to KYC then to pull the money out, or how do people do that today?
So the way our loan would work for somebody who's looking for fiat is they would actually need to sell Bitcoin and then buy the Bitcoin back at the end. And so essentially in decentralized finance, you're now, borrowing the money from yourself. You've got your Bitcoin exposure on chain and so you would sell Bitcoin on an exchange, presumably, take the fiat, use that to pay down credit card debt, to start a business, to do whatever you're going to do with it for the year. And then at the end of the year, if you buy $50,000 worth of Bitcoin, you're flat. A lot of the business today with Bitcoin lending is really a custodial business. So people are sending their Bitcoin to a custodian. We know the history in the space of custodians. And what I would argue is that they're not taking into account the credit risk that they're taking by giving their Bitcoin to a custodian. And, if you look at the history in the space, it's substantial. So when I used to work on the trading floor, if we were doing a big contract, taking a big contingent credit exposure with somebody, we would have to buy the insurance to protect ourselves from that credit exposure. And that had to go into the pricing. And so, people are lending money to these platforms for free. So why would you be giving your Bitcoin to them for free and paying 12% interest or whatever the interest rate is? In terms of our rates, so our rates are determined by the market. And we're talking to a number of liquidity providers in the space. And so we're trying to connect a number of different players. In the DeFi world, there's some opportunities to generate yield from Bitcoin. And so there's, a lot of conversations happening with people who are looking to use this as a strategy for their yield generation. And I would point that this is sustainable yield. And there's it's the same reason that there's a sustainable CAGR that's, above the S&P 500 from Bitcoin. And it's just an expression of better money. And so today, where the market is, you're right, borrowers, I should say, are paying, 10 to 12% interest at least after fees. I find substantially higher than that when you actually add everything together. And there's people making low single-digit returns earning yield. And so there's a lot of room to cut out middlemen and connect those counterparties closely. Like we've seen lenders and borrowers in the kind of 10 to 11% range seems to be where the transactions are taking place now. And again, from my perspective and why I think this is, so again, you have two counterparties agreeing on a contract. As long as there's going to be counterparties agreeing on the contract in the future, the yield will continue. The other thing I would point out, again, the lender is taking this risk of Bitcoin's price falling by half. They could protect themselves by buying a put option elsewhere, IBIT puts. There's a lot of things you could do and eliminate that risk entirely. And that would cost them about 2%. And so then you're saying, okay, well, this person's earning 11% minus a 2% protection from Bitcoin's price falling. And so they have what I would argue is a risk-free 9%. The risk is the smart contract risk, the Oracle, potential issues with the platform, which is why, again, we open source as much as we can, make it as transparent to everybody. And what I believe is that yield, that 11 minus 2 or 9%, is going to act like gravity and attract money to Bitcoin over the coming years and decades until that yield goes down to what treasuries are these days. I mean, ultimately, this is better collateral. And again, we're very, very early.
So Kevin, you mentioned around different people that are interested. You don't have a required KYC. It's very much in the ethos of Bitcoin. Who are the first customers? Like when you think about what's my target cohort to start and to like really grow the customer base, who are the people with the biggest pain point that you feel like you're serving first?
Yeah, this is a great question. In terms of the early users, I'll say the people were people who wanted to leverage their Bitcoin exposure. And so we have the first contracts that we did a month ago settling later this week. And it's kind of hard to believe that we've basically round tripped from 102,000 a month ago down to 80 and back, and so, at lower prices, leveraging Bitcoin exposure was what the client base wanted to do. There are a lot of potential partners, and I'll just kind of go through some work we're doing with some mining firms right now. Is they're looking for financing to be able to offer financing for mining equipment. And a lot of that risk with the mining equipment is a 3-year investment in hardware. And so if the loans could be 3 years, we could, and for us, it's very easy to change the config file to make 3-year loans. And it's a matter of finding liquidity where people have Bitcoin and people are willing to accept a 10 or 11% return, each year over 3 years to support miners in their ability to borrow against the Bitcoin they have to buy mining equipment. And the miners are really interesting to me because the no KYC aspect. So they're mining free coins, we'll say, and there would be the possibility of, borrowing against KYC coins and using that to generate these non-KYC coins. So that's an interesting one. But, again, I think the same possibilities exist for real estate financing, really financing any business on Bitcoin. And my job over the next couple of years, certainly the next year, is going to be connecting kind of real world fiat money looking for yield to this product. And so, I think there'll be a number of yield products that get developed in the space in relatively short order. And those yield products will probably use a combination of strategies. And I expect this to be one that is front and center.
The $1 million question is, how do you guys make money?
Yeah, great question. So we charge 0.5% spread per transaction. So that fee is added to the amount that the borrower is contributing to the contract. So we charge the fee to the borrower only. From that fee, we're obviously paying ourselves to develop the platform. We're also paying for the 2 Bitcoin transactions to be published. And so that's how we get paid. And our model, so in partnering with exchanges or liquidity providers or miners who are able to offer this financing, it's a community-based initiative. This is a decentralized network where we're looking for everybody to participate and share in that revenue as partners. And whether that's, you signing up tomorrow, Avi, and using your referral code, and we're very much interested in tracking and compensating our referral partners. And so the plan is to share revenue with those referral partners.
Just to quickly follow up on that, because I'd imagine, it's a 2-sided marketplace, right? So you need the liquidity providers, which it sounds like you're getting in front of, and then you need the people to ultimately be borrowing, right? So is it like a matching engine, or like if I'm there and I'm like, I'll take 10%, but someone has 10.1%, will it tell me, or is there some way to indicate like I got to go up or down a little bit?
Yeah. So it's a traditional market bid ask, and, on the ask side is where you can borrow live. If you want a better rate, you can leave a limit order, or you can execute at a market order with what's available. So when there is a match, so when somebody executes an order, what happens is both people receive on their app the contracts to sign, and then both clients need to sign those contracts for the transaction to be published. And so there is that step. And from a kind of a user experience perspective, we want, it's definitely going to be easier to have clients who are well engaged and, understand the process and signing, so that transactions aren't kind of executed and then, don't get signed and go back into the marketplace. And so we're, working through the process every day.
We saw something yesterday around Malaysia actually cracking down on Bitcoin miners. And is this maybe the biggest reason you would think now that people would love to come to Cadena for non-KYC, fresh Bitcoin through your platform is they may not want, because Malaysia's considering a ban on mining, as a country. They're saying that some of the power was stolen, it's free power, and it's, really loading the grid. I don't know if it's just politically driven. I'm not an expert on Malaysia by any means, but I do see some value in having non-KYC Bitcoin if you are a miner, if you're running an operation in a country where they're even talking about, manning or banning mining operations.
Yeah, I think there's an advantage to KYC, non-KYC Bitcoin, everywhere. And so, I'm beginning to learn more and more about it. And I think, I think it can trade at a premium in many cases and should. And so for miners, it's an additional benefit to be getting these clean sats. Governments are going to be governments and, do everything they can to centralize power and control, whether it's, I don't know much about Malaysia or, whether it's Canada. So what we tied into talking about before with the level twos and centralization and other things, I mean, these are real risks that people are taking, and they don't necessarily need to take them. By having Bitcoin in self-custody, there's a number of tools that are available, and I'm convinced there's going to be more tools available in the future to manage yourself in a fully self-sovereign way from a financial perspective. I think, people move to Bitcoin, the money didn't work, right? So people are flocking into stocks and bonds and other things, and now stocks are 50 times earnings, and, real estate doesn't cover the mortgage payment, and there's a number of bonds that'll pay a negative real return, and a number of other terrible investments in the traditional financial space. And, over time, that's going to continue to come to Bitcoin.
What do you see in terms of like some major catalyst coming from the TradFi space? Do you see the big, beautiful bill injecting a ton of money for us in 2026? Do you see the Clarity Act coming into fruition, or any of these big things that are happening in DC that will affect Bitcoin?
I see a lot of money printing coming,
Yeah.
and I see that impacting Bitcoin. I see lower rates on the horizon. I don't, not a believer that the economy's all that strong. The desire to lower rates to reduce borrowing costs, well, they've essentially lost control of the long end in many developed markets, and the math is horrifying if you're one of these countries. And so the only solution is more money printing, and nothing stops this train. In terms of a catalyst for Bitcoin specifically, there's a huge opportunity cost to holding Bitcoin when you can get paid 5% for holding a treasury bill. The opportunity cost goes down pretty substantially when you're at zero rates again. And so similarly for gold, and I do think we are headed for substantially lower rates. I think every rate hiking or cutting cycle is longer, and, has much more rate cuts or rate hikes than people anticipated at the beginning. So there's centralization, to me, is kind of the big issue in society in general, right? Like, we see this terrible decision-making in COVID and gain of function research and forever wars and Ministry of Truth type stuff. And it's horrifying. You can watch the results unfold in real time, and like, who wants this, right? So we can all just go live our lives in a decentralized way and do what we want, or we can, be slaves to the power structures. I forgot what the question is, so I should really stop for time.
Makes a good point though, because I think if you're looking at a future world of decentralization, this is the Balaji, his conference all around like network states and moving beyond the traditional country structure, you're going to need a bank, right? So you're going to need a way to either get yield on the assets that you have or be able to borrow to be able to buy real estate to get income producing assets from that. So really people need to understand in Bitcoin, because there's no emission schedule, because it's a fixed supply, you have to find ways to make yield. You have to find a bank to serve that community and go. I guess from you, El Salvador, is that really what you see, or in Costa Rica where you are now? Is that really what you see is meeting contacts and meeting people that are trying to find a way to build that future decentralized state?
Yeah, I think that's clearly where the world is going. And I think this is fundamental and people need to understand this. If you look out into nature, this is kind of natural selection and evolution. There's all this, when you allow the world to exist, there's all these tales and strange things going on. And that's where the innovation happens. And that's how we get, to evolve as a species. And as other species evolve, that's how it happens. It's the variability. So to try to cut that out is just completely absurd and so short-sighted. So again, I think this is a natural state of things, and we're going to be going back there because the centralized power structures are incapable of managing that power responsibly and lead to print money on top of taxing people 50% of their marginal income. So until that changes, places like El Salvador are going to be huge winners because it is, really absurd. And, when you look at the numbers, you don't need a massive amount of people moving to El Salvador to move the needle on, the types of people moving there are the types of people you want to be moving there. It's really incredibly fortunate that he's had this foresight and been able to see this coming. So you mentioned, well, we'll need banks in the future. I'm not sure that's the case. The banks look like Blockbuster video to me. And we're about the stage where they're saying you don't need to rewind your CDs anymore or tapes anymore to bring them in by, offering these bespoke Bitcoin solutions, whatever. Oh yeah, we're playing the Bitcoin game now. Well, it's too late. Like, you can't move money around. I can't send a wire. You freeze my account if my kids use my credit card. Like, enough of this. The whole system doesn't make sense. And what I think what we will see again, always, is that it ultimately is one centralized system. So if one goes down, they're all connected, and it's going to require a huge public bailout. And I don't know where that money is coming from other than a money printer. And then you're setting yourself up for the same thing happening down the future. And so, we had that show the other week where we were talking about, all these custodial failures in the crypto space. Those things happen in the banking space too, historically. And I don't see the political will to be bailing out these irresponsible centralized institutions anymore. And so, people may not want to think about credit risk or taking responsibility for their own funds, but I think they're going to need to, is the reality. And again, the tools will be there over time to develop a financial system where people can deal in a self-sovereign way. I mean, we have a very basic loan product and yield product today, but there's a number of other things we can do with this technology going forward. And it's really exciting to me that we can build this new world without centralization. And again, to me, this is the entire point of Bitcoin. It is the entire point. It's not like, it's a sideshow. This is the reason. Like, it's not an accident that 3 lines into the white paper, Satoshi is saying the main benefits are lost if a trusted third party is required. That's the point. I don't know how to say it more clearly, but, people, there's a convenience of having it in your brokerage account. There's several advantages of different things. And, once your brokerage account gets frozen by the government because you spoke out on social media or used a word that wasn't allowed, you really figure it out really quick.
You see it in the UK, like people are arrested for tweeting. The governments have lost control of the media, right? They don't have time now to spin it because things move so quickly now on social media and they're getting exposed. Like I'm from Minnesota. There's just like $8 billion missing and they're going through now and finding where it is. And I think it was Ramsey County. A bunch of their property taxes are being sent out to NGOs, right? And so it's like, they started to do this with Elon Musk and it kind of died off with Doge. Minnesota is the tip of the iceberg. I don't think they're the only ones that this is happening to. And people are going to be pissed off when they are working their ass off day after day and they go to their bank account and it's just dwindling and you're going to spend $50.
You have the military and now you have a huge ability to continue to export debt. And really that to me is kind of the key features, the key innovation of the U.S. economy is its ability to export debt to, China, Japan, and now the third world. So, I would say like when you look at Venezuela and Argentina and other countries that have kind of fallen off this fiscal cliff, there's a way to avoid it, which is to be responsible fiscally. And I think when I look at maybe Canada and the United States, maybe we kind of were responsible for longer, but ultimately these fiat currencies are all going to end the same way. Maybe we're seeing that happen right.
Yeah.
So,
Amazing times we're living in.
I have to ask, outside of Cadena, what is one good tip you have for Bitcoiners? What is something that you do on either daily or weekly basis that you like to tell people, you like to talk about, whether it's using a specific app, whether it's communicating, via an app, whether it's health or wellness? What's something that you're like, hey, like if you're into Bitcoin, you're probably into this specific thing?
Maybe I'll fade into what Avi was saying a bit, but you were talking about Twitter and the news. And I would say that this is all kind of the rise of decentralization. And so we're starting to see it in the news. We're starting to see it in money. We're starting to see it, different people kind of following their own rabbit hole and ending up at a certain place. And, maybe in Costa Rica for health reasons because you wanted to escape the system in Canada or different things. And so, to me, that's the really exciting part of Bitcoin and what has been so great about, becoming part of this community is seeing that people are kind of actively deciding to exercise self-sovereignty and take responsibility for themselves. And the community has been great from a support perspective, but also just really talking to smart people who are engaged and looking at things with open eyes, as opposed to, you mentioned Minnesota and the kind of horrified, to me, that was Canada, right? But it wasn't necessarily Somalian people benefiting. It was, governments and friends and insiders and other things. And those things just went on and on and on and on and on forever. And nobody ever got punished. And, that's money I worked for at the end of the day. And I think something's got to change. I think when you look at tax rates over time, just continue to go up and up and up. And there's no ability to reverse that. So essentially, as a society, we've decided to go long government out the wazoo and everything else to the wayside. And it turns out that just investing all your money in government, it's not the best idea, right? It just leads to some really, really inefficient outcomes. And you see people suffering, you see all these things, and that's the reason for it. Why don't we change it, right? And we can change it with Bitcoin is the whole point.
The world is changing quickly and, you need to take your self-sovereignty in your own hands because one day you're not going to be able to, potentially. And it is this surreal world that we're living in. You don't think so in the US, right? People trust their banks, people trust the governments, but it does seem like it's waning quite a bit. And I think tools like yours being available for people and having that optionality are important, but I'll give you the last word here.
Yeah, I really appreciate the platform, guys. For us, it's really important to get the word out, and it's great that there's supportive people like you who are able to help us do that. And so, really grateful if people are interested. Again, cadenabitcoin.com, and the Twitter is at Cadena Bitcoin, and Cadena is the Spanish word for chain, and Bitcoin is Bitcoin. So Yeah, we're excited. If anyone wants to help with any of the GitHub repos, look at the Oracle, the app, have any questions, please reach out. We are continuing to add liquidity, so I would always check back. And I think by the end of the year, we'll be running full steam, and we've ironed out, I think, all the UI issues, and really look forward to scaling that.
We're going to have you on 21race.com, like company/Cadena. So great way to check out what Kevin's doing. We'll try to add some of your other podcasts in there, get a sense of just all the areas you're talking about. Because I do think the DeFi lending on Bitcoin is new, it's exciting, but I think it needs, just more education, bring people on board, see what the risks are, and also not be afraid to innovate. So we really appreciate it, Kevin.